Hello. Welcome to another ES Futures Trading stream. Today is Sunday, October 29th. It is 5:36 Eastern Time in the US. We are just 2 days before the end on the month. There is some interesting things going on in this market. As usual, what I do is start reviewing what's happening, what I can see in my bigger time frame charts. What I have here, what you can see here, let's do the other one better. What you can see here is the monthly, weekly, and daily time frames. Okay, this is a daily time frame. Okay, the daily or the monthly, well, we got a trend here. We can clearly see a trend. The market's going lower. The market now has re-entered this big range. This is a 13-month range that has the excess below. And not just has re-entered this range, but has been trading inside, or having acceptance inside of this 2-month range. This is kind of like a step on this process, because when the market re-enters the range, whatever range it is, the opposite side of the range becomes the ultimate destination trade. But to go all the way down to here, the market has to deal first with certain levels, right? First is this one, and then we have potential for firecracker effect down here in the bigger time frame. But right now, the situation is this 2-month range here. This was the high of the range. Multiple times this month has got the market has come back inside, get out of this. And as important as this is, there's a situation here where the market has had a pullback from this level, from this high. This is 10% pullback, this is 7% pullback. I was watching this last week, where this market closes. The month is not over yet, but it would put, I think the market would be under certain pressure if it closes below this pullback, right? Because it can force bigger time frame participants on the market, investment money, or bigger capital to rebalance their portfolios here. They may be forced to sell here, and that's why I was watching this. The weekly has another peculiar thing, right? Which is the two ranges here. We have one range up here and another range down here. First, there was a lot of trade around this 43.50. That's why I still have this mark here, the 43.50. This one here, which was a separation of this range, which before the difference was very clear, right? There was a gap in between, and that's not unusual when the market has this kind of distributions. You can see this in the daily and the intraday as well. When the market has this kind of formations, now there tends to be some kind of back and forth, filling up these these voids. That was what was happening here. I don't. That means nothing, right? But it's just an observation. Now that can be used for the future, in future trades down the road. If you see this kind of formation, there is usually something that goes. It should go, the market should go really easy through this skinny formation, but sometimes the market just build up value here before it continues its ways down or before it's being bought here. Now, the weekly, we can see a trend here. Right now, seems like one time frame lower is starting. We have a break, short covering over here, non-excess up here, and the market now is falling, is continuing, is having downside extension. And notice what we have here. The market has re-entered this range, right? Has left the upper range, has re-entered this range, which targets the bottom, the opposite side of this range. Notice how the low of this range, 3840, is not the same as the low of this one. Right? This is way below the 3400. Is down here. Here in the weekly, I'm not watching, observing this one, but something higher here, because I can see a range here. And whenever you have a range here, look at how wide this range is. 1, 2, 3, 4, 5, 6, 7, 8 weeks range here. The market could go really fast through this because there's volume here. Remember how this volume was built, how the market trade here. You have to remember what happened here in the past. I remember this. Why I'm saying this is because I remember that the trade was very mechanical, very weak buying. But regardless, the market make an impressive rally. And right now, there's no excess here. You can see this level here at 41. I have it here at 41.11. I could say it's 41.10, or even the 4100. Right? If you wanna have a round number, but I would do 41.10 here. And notice how there's no excess here. 1, 2, 3, 4 lows, 4 weekly lows have no excess, and below that, this is the 41, the 40.60. If the market by any means take this level, the next one in the monthly will be the one that doesn't have excess. There's no excess here as well, right? So the upper side is no better than the lower side, but there is no excess in the weekly, and the market is about to start. It closed down here. It won't be that hard for this market to continue. And as long as the market next week doesn't take this high, the trend is still to the downside. The trend still will be to the downside here. Now, let's check the daily. What's happening in the daily? I was observing first this 200 moving average here, which is the adjusted. We can see now, for example, there was a lot of trade around this mechanical buying here. And the market has took this one out, this level out. And why I watch that? Because that is a level that bigger time frame participants, bigger time frame components of the market pay attention to. Investment money doesn't know, is not interested in this moving average. Maybe this one, which could be the only one. And that's why I have it here. Now, in the adjusted daily chart, there's no excess in the upper side. Right? You have 1, 2, 3, 4 highs here at the top of this break here. Quite the opposite that is happening in the weekly. There's no excess down here, right at where the market is now, and there's no excess in the upper side. So, this is a weak market in both sides. The selling is not good and the buying is not good. Right? There's weakness on both sides. That's what I got from these charts. This area, this range has been taken, and I am leaving this mark here because I saw good amount of trading happening here. It was bought multiple times here, was bought multiple times here as well, here, before the market finally took this lows out, closed the gap, and proceeded to close the last gap the market had here. Now there is no gap in the lower side. If I have watched the adjusted contract, the 10% mark is down here. Notice how here, right, these lows have been clear. These lows have been clear. But there is nothing below. There's nothing below here. Now, the next thing I was watching, right, is that just the non-adjusted chart. I was watching this. The difference between this chart is basically the 200 moving average, right? The adjusted is up here and the other one is down here. And I was, when we talked about this last week, is if I see trading, some level being traded, it's based on observation. If some level, if the market doesn't pay attention to one particular level or to one level in particular, so I don't pay attention to that one. But I saw quite significant, right? Many times the market traded back and forth from this moving average here. So, and that's why I look at this one as well. I was observing the past week what was going on, and now I decided to keep this one with me as well. And here, you can see that this gap has not been filled yet. Right? You can see as well that there's no excess here. Now remember how the non-adjusted chart was? These four lows were kind of like up here. The market currently have already cleared those ones or repaired those levels. Now, not yet here in this one. And there's another gap down here. The adjusted chart doesn't have anything. What remains the same is or are the pullbacks here. We got this pullback, 7%, 10%, and the market is right there in this one. Let's check it again. The adjusted. Notice what it is, right? 42.70 here, market is down here. Multiple lows, gap. What happened here? Can you see? The four lows are way up here. This gap has been closed, and this gap has been closed as well. You can see the numeric value of this gap is down here. You can see these rectangles. The chart keep these rectangles because I didn't change. I didn't add another drawing set here. It's using the setup from the drawing set from the non-adjusted or from the non-adjusted charts. And in here, notice the difference. Right? I'm going to go to the non-adjusted. Notice what the gap is. Pay attention to that. Okay? And this is based on observations. Will I keep watching this one? Will I keep keeping an eye on what's going on here? It will depend on what the market does. Right? Trading is not a science. It's more like an art. These are Jim Dalton's words. Now, before we go to the market profiles, let's take a quick look at the bond market. Right? Notice what's happening in the bond market here. We had a big break, and there's no excess here on the upper side. We have this is starting to look like a long liquidation. This one as well, long liquidation here. No excess on the high. But the low is also, the low is, it has excess. The low had the excess here, this thing. No, it doesn't have. It doesn't have excess here. This one, neither this one. Gold is having an impressive rally. It was weird. This chart of gold was kind of weird because it made like 3 or 4, 1, 2, 3, 4, 5, 6, 7 heights before it break. It was just 1, 2, 3, 4, 5, 6, 6 charts. I think six new highs, and then it just break. It was kind of weird. I don't know if it's going to make a new highs here. Crude oil is having some rebalancing. Same goes for the dollar. Okay. Oh, and the intraday, what we have in intraday, it closed. No, this is a range. Friday was a range. Now, let's go to market profiles. It was clear. I hope you have noticed this from market profiles. This day, the day previous, was really high volume here. Really high volume, right? Really high volume here. With a rally high here. Big break and a rally high. The market couldn't take this break because this is a directional movement to the upside. Right? Two things can happen here. On Friday, if this is just a rebalancing or liquidation of this day, the market will open in here or maybe up here and continue in this directional move to the upside. But if the market opens below this high, or if the market doesn't take, this is important reference actually. It was important reference on Friday. If the market cannot take this high out, it means this is just a continuation of what was happening the previous day. But there's always some but, right? The break is getting weaker and weaker and weaker. Again, notice where A high was, exactly halfback or POC. You choose which one. D also took A high and it's very, basically the same level. It has excess though, a couple ticks, technically it's excess. But I consider this high weak. The previous day also is weak because it's the high of the lower distribution, or it's the lower distribution in the overnight, or it's the low the previous day. This one is better. Yeah? This was a nice day as well because the market has no attempt whatsoever to do any kind of counteraction to what happened in the overnight. There is long inventory, there's short inventory here, 100% short, and the market didn't pay attention to that. And this high, look at these highs here, 1, 2, 3 highs here. Very questionable high. It has excess, but it's very questionable. Another weak low, big high here. Now, it doesn't mean I'm going to go long, right? But I'm being aware. One thing to be being aware of what's happening here. There's a tremendous amount of weakness in the upper side. The break continues. The break to the downside continues. It has two distributions. Something that, to me, that's very important from Friday is that I don't think this inventory is that good. Okay, every single rally from Friday, even the little ones were being sold. All of them were being sold. Whatever you have a trade here on Friday, the only trade you could have done or pretty much like a very low risk trade was short side. Every rally was being sold. If you were in this long side on Friday, you have to rethink what you are doing. Right? If you have successful trades, well, that's good. But I think the risk was high because everything was on the lower side, on the short side. And now, in the same way how this rally high was important to me on Friday, the close or the distributions is important to me this week, or this Monday, or tomorrow, or today that starts, is going to start in the next 5 minutes. Notice where this high is, right? Close of the distribution is very mechanical as well. Now you can call this a spike as well, kind of like early in the session. You can call this a spike to the downside, but it's not too late in the session to call it a spike. But I can treat it as one. But this is important. If the market closes this distribution, and I will question the downside movement. The other thing that's very important, there's no excess on the lower side. There's no excess. The intraday, the action to the downside has not been completed yet. Remember what happened in the weekly time frame. I hope you remember the charts, right? There were 3 weekly lows very close together, and those ones are these. You have it here, here, and here. So there are good odds that this market is going to can have downside continuation. I'm not saying it's going to have, but the odds are high. Right? I'm not going to go short right away. I need to observe what the market does, where the market opens relative to Friday. The market opens inside this distribution, the market opens below, the market opens below. Everything can change depending on where the market opens. Below this gap is the non-adjusted contract, right? The gap has not been closed enough, but I have on Friday, you were here on Friday, I had these gaps here, these levels up here. This high is weak. This triple intraday low is too far back in time to be of relevance. Right? This intraday, these are. I use the same chart. I just rename. I rename, for example, right now is I call this this new contract, this December contract, right? But I override. These are references from all contracts, right? They are not relevant now. But if I see the market trading a lot, there's a lot of back and forth from this level, for example, or from this one, so that gives me an idea that whoever's doing the trade is not something serious or not something big or stronger. It doesn't mean it's not going to have downside continuation, right? That's not the meaning. It is just like this is a competence we are having here. This is a very competitive business. If I want to be successful, the more I understand my competence, the higher the odds of success I'm going to have. That's it. Only that. Only that. And it is just one piece of information. Now the market is going to open in maybe like 2 minutes. I guess I still have time to check something else. We were talking how this market has been trading from or using these nodes of volume. Notice how the volume here, 30,000, 24,000, 40,000, 40,000, 40,000, 40,000. There was two nodes of volume here. The market took this one out and it couldn't make any damage in the upper side. Now we have the same scenario as well. Same scenario on Friday for today or for tomorrow, Monday. We have two nodes, two nodes here. You can see traders are getting used to do something. It is not always the case that happens like that, but that's something that I noticed for this contract. All right? I don't know if at the end of December or next year it's going to be the same. I don't know. I just keep watching. And volume has been really good. It has been increasing. Friday though, oh look at that. Sellers down here. It opened really high here relative to the close. Okay, so I want to see what happens here now. So all of this inventory now, all of this inventory, remember what happened on Friday, that every single rally was being sold. To begin with, this distribution right now, all the shorts here are, you can see there could be a problem now. I'm not saying nothing. This is just the opening. The market is open for less than a minute in the overnight session. It means nothing. I have no plans to do anything here. I'm just, what I like to do, if I can, whenever I can, I like to watch the opening, how the market opens the week. Right? I can see, for example, right now it opened above. This is the third time in a row. Okay? Last Sunday happened as well, and the Sunday before that also happened the same way. It has, there was a big difference between the saddle or last and the opening. In one case, if I remember, we have a big break, and the next one was a rally in the opening, in the overnight, I mean. Okay. Now that I have that, I try to remain as neutral as possible. Notice this day, for example, this overnight, this short inventory here. Notice where this high is. This high, exactly this high. Notice what happened here. Selling from POC. Very mechanical, very, very mechanical. What the heck is this? No one revisited overnight POC? No, the overnight POC is up here. Is this a weak level? No, this doesn't mean anything. All right. All right. Notice the significant amount of volume, right? This is only 2 minutes, less than 3 minutes. Notice the volume here. One contract at the top, it just dries, but notice how this thing is very skinny. There's no selling here. No. As I say, it doesn't mean anything. Right. The next thing, I try to remain as neutral as possible. And what I'm going to do now is, as usual, I'm going to check what do we have for next week and put it in my homework. Okay, this is part of my homework. What events do we have scheduled for next week? Let's put it here. This week high, I think it can be corrected now. Okay, but let's check. What do we have for next week? Inflation remains high. PCE was higher. And this is what we have next week. ADP, I can see one here. Monday, FOMC meeting. Oh, look at that. They will have FOMC next week. Consumer confidence. On Tuesday, FOMC. Nobody's expecting anything. Jobs, I think jobs is going to be important as well. PMI. There's a bunch of things. Oh, look at this. Oh. Look at this, man. Look at this. This is something. Okay, I guess I am too. I don't like this. Let's do it again. This is going to be very important. Jobless, this is the weekly claim, factory orders, and oh, what the heck, employment situation. Oh, this is non-farm payroll. Sweet mother God. Man, the next week is going to have really good events as well. It can bring some volatility to the market. We have FOMC here, non-farm payrolls, FOMC, Chairman Powell speaking here. I'm going to save this. And just add it to my Now the next thing is, let's check if I have two calendars that I check. Monday, because sometimes some news, Faith Press conference, Friday, no, non-payrolls. Okay, we have that one. Now, earnings. What do we have for earnings? I am looking for. Okay. Earnings here. All right, these are the earnings for next week. Let's see what we have here. AMD, Norwegian, PayPal. Where's okay. Apple here. Hugo, Chicago, Clover, Eaton, Caterpillar, JetBoom. I guess the most relevant is maybe AMD, Apple, for Thursday. Right? Remember, Wednesday we have Chairman Powell speech. Thursday we have Apple. Friday we have non-farm payrolls and consumer confidence on Tuesday. So I think only Monday won't have much. So let's save this also. And I save this on my homework. For easy access. Whenever I want to check, I know it's here. Boom, I have it here. The last thing I do is I check. I check Jim Dalton's weekly update. That's here.
The week ahead.
Okay, let's go ahead and here, and let's just compare, right? I suggest you to do your own homework as well, every single day, every single week. Just by doing it's like showing. It's just showing to the job. By doing this, you will do more than most of traders. Huh? Sometimes it's simple, but it helps. It helps to identify where the market is at, what the market is doing. It kind of like shake your brain, right? Shake your brain, because sometimes we are just so focused on price, so focused on the minutiae of the day that we can get lost if we don't do that. I remember one of the most kind of like nice things that I find out there was Brett Steenbarger. I don't know if you have here. He's a trading psychologist. Brett Steenbarger here, and he said he has some really quick videos. Trading is about sell. It's a very personal journey, and many psychologists try to help. Many traders look for help in psychologists. One of the things that I remember that he said is that sometimes or a lot of traders or many traders, what they need is the solution to most of the problems is just doing homework, because most of them just don't do the homework. It is not just something personal than some trauma or something that they have experienced in their lives, but it's just do your homework. You cannot expect having good results if you don't put what it needs to do. or whatever this business needs, you at least has to try to do something, try to put some effort in here, and part of that is the homework. He has really good advice. Yeah, but whatever I could find, I guess I went through a lot of his videos, not just this one, because he also has some interviews, but seminars or webinars that you can find in YouTube. It's very, very quite illustrative, very illustrative. Okay, let's hear Jim.
Came across two predominant viewpoints. One camp is calling for a year-end rally. The week ahead. As I reviewed the weekend news, I came across two predominant viewpoints. One camp is calling for a year-end rally, which focuses heavily on seasonality, while the other is more pessimistic, expecting the current downtrend to continue. The idea of a year-end rally, especially this late in the year, implies a V-shaped recovery. V-shaped recoveries are uncommon and typically occur in response to significant policy interventions, like the one we witnessed during the pandemic, with large fiscal and monetary stimulus packages. It's likely that these interventions have contributed to the current inflationary challenges. A more realistic expectation as a termination to the current downtrend would be for the market to enter a period of balance or consolidation. During the consolidation phase, the market trades within a certain range without a strong upward or downward trend dominating as investors await further clarity or new information. As of Friday's close, there was no sense of consolidation. Our opening comment last week was that markets hate uncertainty. Nothing has changed to alter that statement. There is uncertainty surrounding the geopolitical situation, the FOMC's decision on Wednesday, with particular emphasis on the Fed chairman's comments during the press conference, Apple, which is the largest stock by capitalization as it reports earnings on Thursday, and finally, the uncertainty surrounding the jobs report on Friday. You will recall that last month's blowout report caught the market off balance. It could be a very spooky week. Stay tuned as Jen presents the details of our next primer to begin in December.
Thanks, Jim. As stated, our next live market profile primer course will start on December 6th and run through December 14th. The first 4 days of this condensed 8-day course takes the first few linear teaching portions from our Foundation and Application of the Market Profile e-course and allows for questions in live webinars. Then the latter 4 days, Jim will be narrating the live markets, providing daily reports, which is our form of homework, and give you an idea of how all of the variables come together and how Jim observes and analyzes the market. It's a great class to take if you're new to Market Profile and want to learn more without a large investment in training. Learn how Jim observes or approaches the markets, or maybe you're experienced and just want a good review to refresh your basics and observation skills. All webinars are recorded, and students of this primer will have access to materials for 3 months after the course is finished so that you have time to review. And for the first time ever, WindowTrader is offering a free 1-month trial of WindowTrader Blue. Eligibility requirements apply. You need to be a signed-up student for the December primer and be a new subscriber to WindowTrader. More information and instructions will be sent to students signed up for the December primer, and we will also have some webinars to help students get set up properly so their charts can mirror Jim's. Take advantage of our early bird pricing. From now through November 12th, the course is on sale for only $389. Thank you and have a great trading week.
Okay. Yeah. And this is good. I mean, this thing, this is nice.
and be a new subscriber to Windows.
This is nice here. What you can have if you're interested in window trader is basically because this thing is kind of expensive. It's almost $300, and the webinar is 300 something, almost 400. So kind of like a 50% discount on both here, or almost free one. And oh, it's nice. That's nice. Okay. Look at this here. I have noticed something here. And this mark, we talk about this mark. He also has this 4250. He's keeping the adjusted profile here. I know. The interesting thing is, you always hear. Not that you always hear that, but you always have to play or have scenarios, right? He was talking about one scenario in which many people is expecting a end of the year rally, right? But for that to happen, for that rally to happen, for that kind of event to happen, this market will have to form a B shape. And those B-shaped markets just don't do B-shapes, right? Whenever you see a B-shape, okay, there is something spooky there. That's not good. Something is going on there. You need to start questioning what's going on. And the last time we had a B-shaped market is because we had this huge amount of stimulus that was, free money that was going on. Market was the government was just spending a lot of money, right? Just lots of money. I don't even have it here. Was here. This B shape here. It was crazy, but remember the pandemic. There was a lot of money, lots of money that the government, injected into the economy, and as a consequence, and I agree with Jim, right? This kind of money that get into the system, is probably, more likely, the good odds that was the reason we have this kind of like a crazy inflation going on right now, because of this crap that happened here. Okay, now look at this. Nice buying here, very mechanical buying here. This is a lot of volatility here, and a B shape will happen here for the market to have an end of the year rally. So just be careful there. Be careful. There's something else that what else had he spoke about. The events that we have Chairman Powell, we have non-farm payrolls, we have Apple, the biggest company. This rally, this market is, is being. If you check the performance of the market, almost all of the growth has been. The market, the big tech companies are carrying this market. Everything else has been really bad, but the big ones are the ones that have carried this market this long distance. I guess I don't have nothing else to add here to what Jim has said. Also, regardless of what I was saying, my yearly focus is, my main focus is going to be where this market opens relative to this distribution. For example, the market can close the gap tomorrow and close the distributions. The upper side is very weak, right? Oh, okay, there's something else that I forgot Jim mentioned here, is that there are good odds here that this could be some sideways trading here, right? So the market not having big rally here and not big breaks here. You have this big area here. This is absolutely weak here. There's nothing here below, but there's a good range here, Now, if you check the weekly was a dominant time frame the last couple of months. You check the weekly, you can see this range here, right? We talk about this range as well. These are the steps. The market can trade sideways here. If it quickly goes through this, okay, that's also something, right? Because if you expect something and that something doesn't happen, you need to have another scenarios in mind as well. So you don't get so focused or too much like hyper focused on only one thing. And if that thing doesn't play out, you will just get so confused and won't be able to react or to adjust. The monthly has this range, this 2-month range. This weekly has this range here as well. And remember, this is very important. I think this is very important as well. This market doesn't have any more gaps in the lower side. All right, the lower side doesn't have any gaps. These gaps have been clear. This level here that was support, this can become resistance. We have the 2250 as well, which coincides with the 10% mark. This low, I don't have that one on my chart. In this one in particular, extend, duplicate, what's for 250. Why I have this was previous one, right? Now could be this a little bit higher here, all right? And this was I don't think this is relevant anymore because the market has taken this one and used this level here. Now we have multiple gaps in the upper side. The structure is weak and here, super weak here. Or kind of like how many highs we have here? 1, 2, 3, 4, 5, 6, 7, 8. 8 highs, like 5 or 6 of those highs are weak. Do you remember? 1, 2, 3, 4, 5, 6. 6 of those 8 are weak, are very, very questionable. Now take a look also who is holding the short inventory. All right, I don't have nothing else to say right now. I wish you a good start of the week. Stay safe. I hope I can be doing a market update tomorrow before the opening. Stay safe out there and have a good rest of the week or the weekend. Enjoy the weekend or whatever is left of. All right. See you. Bye bye.